Market Watch, what is going on right now? 16th of December as I'm recording this. You're probably watching this after the 19th of December, and it's the 19th of December when the Bank of England were meeting to make that decision about whether they're going to drop rates another probably 0.25% or keep rates the same, or God forbid, put rates up. So you already know this, but I'm going to predict that the Bank of England will keep rates the same. They're not going to do anything. Two reasons. One, because of the budget back in the end of October, we're still seeing the financial ripple effects of that playing out across the consumers in the UK. So the Bank of England, I think, will want to just see how that pans out. The second thing is inflation, as I've got on my bullet point here, has back up to 2.3%. It was at 1.7 in November. Now, that seems quite a jump. And there will be many commentators with the headlines, oh my God, the wheels are falling off, the economy, inflation's going rampant. Now, if you're a regular listener and watcher of my updates, I have said multiple times that this has been planned, it's expected. The Bank of England are aware that inflation was going to increase around this time of the year. And that's to do with energy cap and energy prices increasing. The energy cap has been revised. And that had that immediate impact on the inflation figures. So it's not a shock. It's already planned to be expected. So we're not having the Bank of England scrambling around trying to figure out what the hell's gone wrong. They know exactly what's happening. And it's a bit like a little bump in the road. The Bank of England expect rates to drop again as we get into 2025. So not a big shock. However, the reality is inflation has gone up. So the Bank of England will want to just pause, I suspect, and just see how that plays out over Christmas and into the early part of New Year. So that's why I think that rates won't drop any further. So therefore, what's the impact on mortgage rates? Well, again, if we look back to November, we saw my update was that, oh my gosh, rates are actually increasing for mortgages. I explained why. And now we're seeing a little bit of settling down. Swap rates have started to come back down again. And guess what? That saving that the banks and building societies are making is being passed on in slightly cheaper rates. Again, 0.1, 0.2, and 0.3. That's a sort of reduction I'm seeing when products are being relaunched. But it's pretty much wholesale. And so, again, good news that we're now seeing rates start to drop a little bit more. But I don't see anything more dramatic than that. We're getting into Christmas. The banks are not going to be giving fire sales in December. You guys are, distracted with the shiny Christmas baubles and mulled wine and whatever else is going on in your lives over December. So there's no point the banks trying to get your attention during this particular month. So we might see rates drop even further in January, even if the Bank of England don't have a further rate drop in the early part of New Year. We might see banks who want to hit the ground running. But again, let's cover that off in January. Now, the one disappointing note is that I want to talk a little bit about something called the Mortgage Charter. You probably haven't heard of it, but it was launched by the Tory government back in the autumn of 2022. Partly as a result of, and can I believe I'm going to mention Liz Truss? I swear it's the last time I'm going to mention her name. But after her budget and Kwarteng's budget release in September 2022, there was such uncertainty, not only with the markets, but with us as consumers, that the government produced this charter, which within that had a range of promises that they got the banks to sign up to, that were additional protection levels for us as mortgage clients. And within that charter was one particular promise from the banks to allow us mortgage holders 6 months before our fixed rate ended to lock in the next deal. And of course, in a market where rates are rising, that's a massive peace of mind. So here we are in December 24. That promise was still there, and this is why I've got the word creaking here on my bullet point, in that until in the last week or two, the banks were still honouring that. So even if your deal didn't end until June 2025, You could contact your existing lender right now in December 24, see what products were available now, lock one in, and then you park that until June 2025. Fast forward then to June, and you could then see whether that deal that you locked in was still the best deal for you. If it was, you take it. If that current lender now even had better deals because rates had actually dropped in the following 6 months, you ditch that deal and you replace it with a better one. If there's another lender somewhere else in the market offering a better deal than what you'd locked in December 24, you can still ditch that deal and go elsewhere. So there was absolutely no downside to doing that. But you need to know when 6 months ahead of your fixed deal ending to have that conversation with your existing lender. So what's creaking right now is that lenders are starting to renege on that charter promise. And particularly, I'm going to name and shame the NatWest, Nationwide, Santander, Lloyds, Halifax. It's your big major high street banks are now starting to renege on that promise. So the takeaway message for me on this sheet is, please just contact if you've gone direct to a lender, contact them directly, or even go via your broker to say, at what point can I contact my existing lender to find out when the new deals are available to me? Is it still 6 months, or is it now 5 months? Is it 4 months, or is it even less? So you can then put that date in your diary and check that and just lock a deal in. It doesn't commit you, but it's like a worst case scenario. And of course, if there's a better deal and your broker can find a better deal, then you're not committed. There's no penalties. You can still bin it and move on. Hope that's been of use to you. Please, if you want to have a chat with any of our team, there'll be a link at the end of this piece. Make an appointment, have a chat, and see if we can help.